You are watching All Things Real Estate and More with Ann-Riley Caldwell. With a brand new episode on Name Your Own Price.
Hey, I'm Ann-Riley Caldwell. I'm a Nashville, Middle Tennessee Realtor, and I'm back with another episode of All Things Real Estate. And we're here with Kevin Clingan to talk about home ownership and all the policies and things that you might need.
Exciting stuff of Homeowners Policies, yes.
And so one of the things that you see a lot of times on commercials, he and I were just talking about it, is name your own price and basically just construct your own policy somehow.
Right.
And so we're going to talk a little bit about the hidden cost of naming your own price.
Right, yeah.
So tell us why that's not always a good idea.
So I have a saying that, and I think I've said it on one of these podcasts before, don't get caught comparing your apples to watermelons. There are policy provisions that are pretty standard in what's commonly known as a HO3 and an HO5 policy. That's not very exciting. We don't want to talk about that. That'll put all your audience to sleep. But there are provisions that are going to be in all of them, your dwelling coverage and your personal liability coverage and your personal property coverage. But within those different policy provisions, things can be very, very different from one policy to the other.
Okay.
And so if you are thinking about insurance, like most of us do, once a year,
Right.
When we get our premium statement and the premium has gone up and we're not mad about it, well, you can always go out and find a cheaper premium. Another catchphrase that I hear is only pay for what you need.
Right.
Well, how do we know what we need? Now, I can't tell you the number of people that come into my office that, example, today, there was a man that came into our office and he was drastically underinsured for his dwelling coverage. If his building or if his home would have burned, he would nowhere near have enough coverage to rebuild that home.
Oh, well.
Yeah. So that's one of the things that you need.
He would want it rebuilt.
Absolutely, he would want to have it rebuilt. I would want mine rebuilt. But if you don't know the ins and outs of these things, another common issue is what we call a named peril policy versus an open peril policy. And the named peril policy will give you coverage for, and this is the old joke, right? Oh, I have this insurance policy, but it only covers the accident if it's on a Tuesday under a full moon on the 3rd of July in Switzerland, right? So that's a named peril policy. Whereas an open peril policy tells you what the policy won't pay for. And it really is, it gives the policy owner the benefit of the doubt. This is covered unless you tell me it's not up front.
Okay.
And if it is not exclusively listed as something that's not covered, then it is covered.
Okay.
And going into purchasing a policy, that's a huge distinction because you can see that a named peril policy would be much less expensive because the risk is almost gone. Exactly, that's exactly right. So, how many people are walking around on Tuesday under a full moon in Switzerland to have that? It's very, very small.
Okay.
But an open peril policy is more expensive, but it is much better coverage. And that's one of the main things that you look for. The dwelling coverage is another thing that you look for. The liability coverage. In today's world, if you have less than at least $250,000, most of my clients have $500,000 of liability on their homeowners coverage, then you probably are underinsured. We also, and we won't talk about it here, but we also encourage all of our clients to carry a liability umbrella coverage.
I have one.
Yeah, and you should,
Right.
because if you have something to protect, then you need to have as much coverage that you can afford. That is a good value, and umbrella coverage is very good value.
Relatively speaking.
Yeah, absolutely. I have a story that's auto coverage, but again, a man that made millions of dollars a year had $100,000 liability limit on his auto coverage, and he ran somebody off the road, and the person he ran off the road was permanently disabled, and he was 26 years old. and there was not nearly enough coverage under the insurance.
Oh, yeah.
Right? So obviously he was sued. Obviously it drug out. Obviously he paid a lot more than he would have paid for $500 or even $1 million or $2 million of coverage in insurance. He paid a lot more than that. So you can't always name your own price because you don't necessarily know what you need.
You can name your extra coverage.
Yes, you can. You can name your price, but chances are the price and your needs won't line up.
So anyway, hopefully that was helpful, and you'll think twice before you think that you should name your own coverage. And you'll call Kevin and ask those questions and let him give his expert opinion.
We hope you enjoyed watching All Things Real Estate and More with Ann-Riley Caldwell. To learn more about Ann-Riley, or for your real estate needs, visit notyourordinaryagent.com or call 615-930-0313. Thanks for watching.